Good morning, everybody.
Good morning, everyone.
Great to see a packed room. As Abby just told you, my name is Erik Schatzker. I'm the editorial director of Bloomberg New Economy. This is Kwee Juan, head of institutional banking at DBS. Kwee Juan, I am fortunate, let's put it that way, to come to Singapore several times a year. Delighted to be back, to see you all. Here's where I'd like to begin.
Sure.
If we rewind the clock 2 years, just 2 years, few topics felt as urgent as sustainability. Yeah, backlash was beginning to build in the United States, but governments, and perhaps more importantly, companies in advanced economies everywhere were broadly committed to sustainability. The situation feels different today, doesn't it?
It does.
How would you describe it?
I think I would describe it as one whereby it is an environment largely driven by how the respective governments are looking at this whole space.
Fragmenting then.
Fragmented, because if you look at what is happening in the US, as you know, the focus is really dialing down a lot on renewables. But whereas if you look at Asia, Asia has continued to say that they're committed to a lot of what they said they would do per the Paris Accord. And I just visited India, and also 3 months back, for the last 3 months, I've been traveling through Asia. What impressed me most is a lot of the companies' activities are pretty much aligned with what the government's objectives are. And so in Asia, I'm seeing the government putting in a lot of investments, putting a lot of targets out there, and the industries are aligning themselves, seeing that as an opportunity for them to move towards that drumbeat that has been set by the government.
I'm going to make 3 observations that all of you in the room could make just as easily. Number 1, ESG has become a 4-letter word. We have a US presidential administration with a decidedly pro-fossil fuel agenda. And thirdly, most crucially for both the public and private sectors, in most parts of the world, the priorities have shifted to security, to defense, and of course, to trade. DBS clients do business everywhere. How are they responding to these shifts?
I think again, a lot of them, the focus has been on many of our clients are Asian clients, and so their exposure to the US has been not as large as their own exposure in this region. And therefore, in this region, when they look at the development that are, again, happening in the region, they're responding by saying, does it make sense for me to invest in a different kind of business? And so therefore, a traditional company, I'll just maybe quote DBS Energy, for example, in Indonesia is known to be a coal-powered energy company, and how they have seen the opportunity to invest in new renewable businesses. So we just helped them to complete a transaction with Sembcorp Waste. And for them, that is a new area for them to get into. So we're seeing companies responding to different ways of finding new opportunities that are presented by this whole transition. Because we believe that Asia needs to transition into a different energy source, given the extent of growth that we will see and the kind of energy requirement that they have. And so therefore, for them to explore what will be renewable is very helpful for them to look at it from a cost perspective. So it's not just being green for green's sake.
So that raises a question for me. There are at least 3 factors to weigh in the balance. One is satisfying demand. The second, of course, is cost. And the third, I mentioned it before, but it equally applies to energy, is security. Which of those is the most important?
I think for a lot of them, again, it's driven by what they see as the drive by the government policies. So the government says that it is about security, and then they would align themselves to say, if that is something that is important, and the government is providing the framework for them to do that, then obviously they will just invest along those. And if you look at the supply chain disruption that has been happening, many of them are also saying, does it make sense for me to then look at, from a renewable standpoint, what do I need in terms of a supply chain to make that strategy work. And so they are not just thinking about it from the angle of, oh, I need just green electrons into my operation, but rather thinking about it more strategically that, does it allow me to build resiliency into my operation? And resiliency is just not an operational response to what is happening out there. Resiliency could and will be a strategic advantage that companies will start to look at. And this is one way, or rather just one aspect of resiliency that they're looking at.
Kwee Juan, banks were always the biggest and most important members of GFANZ. But as we know, between the US election in November and Donald Trump's inauguration as president, all the biggest US banks, JP Morgan, Bank of America, Citigroup, Wells Fargo, Goldman Sachs, Morgan Stanley, the list goes on, they left the Net Zero Banking Alliance. Japanese banks have left the Net Zero Banking Alliance. Most recently, HSBC left the Net Zero Banking Alliance. Has your industry given up on climate change and net zero?
Well, I think for us, I can't talk about the rest of the banks, but for ourselves, we are staying on course because we believe in a transition, and therefore we want to be the transition bank for Asia. And what that means is we want to be able to mobilize ecosystems and work with both policymakers, the agencies that would like to move this forward for their respective industries that are out there, and as well as the financing that is required for companies who really want to move towards a different kind of energy source. And we feel that that is something that we can play a very big part and a big role in it. So I'll give you an example. So in Singapore, when you look at Keppel Sakra project, so that is a CCGT project. So that's a combined cycle gas turbine project that uses hydrogen. So in the case of Keppel, it's about 30%. And we believe that is actually a transition because instead of using gas fully, they're now using 30%. And over time, that could transition to 100%. So I think that is just an example of what we mean by financing transition as companies, as countries look to shift towards a renewable energy infrastructure.
These other banks are dropping out of the Net Zero Banking Alliance in part because they believe that staying in one way, shape, or form is disadvantageous to them. Why is it advantageous to DBS to stay the course?
I think for us, we are operating in an environment in Asia whereby there are a lot of, I would call lives and livelihoods.
Lives and livelihoods.
Lives and livelihoods. Because if you are quite insistent in saying that everything got to be green and that you got to be green on day one, then that in itself may immediately impact communities that a particular industry is supporting. And so therefore for us, what is important is to demonstrate that we are working with policymakers, with the ecosystems, with companies, to help them to at least have a clear path. And we put out our plan out to 2050 and say that we have a clear path on net zero for the different industries that we handle. And it's a pathway that we will follow. And we believe that pathway will have some ebbs and flows, but generally trending down. And that's something that we think we can stand by and we can help the industries to move.
What ultimately is the reward? Are you being rewarded today for your consistency, let's say, with respect to climate change and net zero? And if not today, how do you expect to be rewarded in the future and when?
Yeah. So I think the reward is already now. If you look at the transactions that we've been doing, so again, take for example the Carrion Water Services in Indonesia, and that is about financing them to supply clean water to 3 cities in Indonesia. So it's Jakarta, let me just check the name of the place before I get it wrong. Yeah, so it's in Jakarta, it's in Tangerang, and as well as South Tangerang. So that in itself is what they want to do. And we were providing a blended finance. So we brought in KXIM, ADB, and as well as IFC into that financing. So that is an immediate opportunity to provide financing. And that does add to clearly the business that we have. And it's not done at a level whereby it is at discounted prices, which is what, 2 years ago, 3 years ago, going green means give me a discount and I'll do it. But here it's about bringing in capital to do what would be perhaps maybe slightly difficult kind of financing. And in there is opportunity.
Kwee Juan, as you know, labeling is important. There is a difference between green funding and transition funding, and both are important. I think we all know what it means to be genuinely green.
Yes.
That's effectively zero emission. Transition is a much squishier term. What process do you and the bank have to ensure that transition is a definition with real integrity?
So for us, I'll take a step back and say, within the bank itself, we have a very clear point of view that says that at the broader point when we talk about sustainability, sustainability is just not about green alone. We look at sustainability in 3 pillars. One is responsible banking, another is responsible business practices, and the third is impact to society. So based on that in itself, our board, we have a board-level sustainability committee that essentially governs the thinking that we have. And that steers us in terms of saying, if we are coming into that financing, we would like to know how that can lead to a path, or can we see a pathway towards green? So again, I go back to the Keppel example. They are taking in 30% hydrogen, 70% is still gas, it's still emitting, small amount. But we can see a clear path that setup can take in 100% in time to come. And that path forward enables us to know that it will get green from that perspective.
We've all heard about greenwashing. Now, the trend in vogue is green hushing or transition hushing. And of course, if you downplay climate efforts to avoid scrutiny, that's going to have an impact on the supply of capital and the momentum, right, behind that supply of capital. Is this, as I describe it, green hushing or transition hushing, as much of a problem here in Asia as it is beginning to be in the United States and perhaps even in Europe?
So again, I'll go back to the fact that many of the activities that you see in Asia is driven by the government's intention to meet their commitment per the Paris Accord. And as a result of that, the activity that we see are genuine movement towards that. So take, for example, last year, I think the whole sustainability or green financing is about $2.1 trillion globally, give or take. And half of that is in Asia. And when you look at what in Asia that money actually goes into, the bulk of it goes into transportation. Mm-hmm. So these are real areas of economic activities that drives the economy, and transportation is huge. And so as a result of that, it's not about transition hushing or what have you, but it's really about meeting a real economic need and an economic development of a country. And therefore, the financing that we see relates to that, building those infrastructure, building those grids that are needed, building those capabilities and storage capabilities that you have in combination with wind and solar to be able to deliver what would be green energy is the direction that we see.
What we've been talking about up until now, for the most part, are the situations DBS finds itself in which the bank hopes, presumably, the answer to the question, can I have the money or will you do the deal for me, is yes. But we'd equally like to know how often ESG and or sustainability plays a role in denying credit or refusing a banking mandate. How often does that happen?
So I think, again, on that front, and this, I think, I don't know how many bankers there are in the room. I guess one of others.
Do we need to show hands?
Show hands? Can I see? None.
They're all shy.
None.
They don't want to reveal themselves.
Okay, none. Okay, I don't have friends in the company. So I think from that perspective, I am quite sure, because this is a requirement from MAS. MAS wants the bank to start to evaluate the impact of climate risk on companies. So from that perspective, the evaluation is not so much of do you have ESG initiative, but rather the angle is really from the angle of risk. Are there risks that are inherent in your business that you are not addressing? And if we are not seeing that, then the conversation with the customer will really be on, we have seen this risk, and so therefore, how are you going to address it? And if indeed it is one whereby there is no clear path nor intention, then clearly that will have an impact on the kind of capital that they can have access to. But so far, all the conversation we've been having would be the clients are aware and they're shifting either their business model or what they need to do.
Are there red lines? And if there are red lines where you won't go as a firm, do the clients know where those red lines are?
Yeah, they do. I think we're quite clear, and that has been something we've been consistent on core thermal financing. And that is something that we've been putting that portfolio on a reducing basis as it expires. It's running down. And that's something that we don't continue to do. It is just purely for that purpose. With no transition on the back of it.
No, there isn't.
Yeah,
there is, right?
Yeah.
I was just about to say we're all familiar with the term garbage in, garbage out. How is DBS dealing with the challenge of gathering quality data, monitoring, and conducting due diligence and sustainability for your institutional clients?
I think, again, it goes down to knowing the customers and going down to understanding what they're doing, and then on the back of that, determining the impact that they have on the overall environment, not just carbon alone, but also water and everything else. So it's about on the ground, really understanding what they have, and then perhaps drawing data from different providers to just do that sense check.
I like the way that you defined the way the bank thinks about ESG. The first was sustainability, the second was?
So for us, ESG, the way we look at it is just sustainability is about responsible banking, responsible business practices, and impact to society.
So much of the focus on ESG, to the degree that it continues, is still about sustainability. How often does DBS address the S? I'm sorry, well, I guess it is the S and the G, issues like labor practices, human rights, community impact, or governance as risks with your clients?
So for us, when we look at the S element, the obvious one is we rely on the impact on society pillar. Yes, you may be aware we have DBS Foundation, and just 2 years back, we announced and say that we are going to contribute 1% of our net profits, so roughly about 100 million, into that fund, into the foundation for the next 10 years for 1 billion. And that in itself is for us to help both from a social enterprises funding perspective to fund new enterprises with a social cause, or to uplift society with digital literacy, financial literacy, and in some instances, just helping society to just live their lives better.
2 quick questions before we finish. DBS, as most of you who are based in Singapore already know, has been, I would say, exceptionally disclosive about the ways in which the bank is adopting AI.
Yes.
And the impact that it's likely to have on your business. Where does AI fit into the bank's work on ESG and sustainability?
So on that front, what we have done recently is we have used generative AI to be able to take in all the ESG reporting that the various companies are doing for those who are declared, and then take that and put it through a list of checklists that we normally would do for ESG assessment. And we use generative AI to allow us to just do the extraction and summary, and then compare that against the checklist and pop up what would be a summary of how the company is doing against those checklists, and then use that as part of our input to the assessment that we would then do against the companies. So that's just one example of using of AI.
And where I'd like to finish is with a question that I find myself asking almost every business leader whom I meet with and whom I interview. with almost no exception, they keep telling me how astonished they are at what AI can do and how quickly it is advancing and how much more it can do next week, next month, next quarter. Tell us a bit about your experience.
I think my experience has been, when I first joined DBS, I was the Chief Strategy Officer. And one of the things that we have done since then was, how do we use the AI ML, which is the statistical and not the generative part, to be able to use it to help us identify risk better, clearly serve customer better, and to reduce costs. And on that front in itself, call me silly, call me ambitious. I told Piyush then, who was the CEO, that we've got to try to measure the outcome. I call it the economic value of AI ML. And what does it bring for us? So that means either you help to reduce risk, generate new revenues, or reduce expenses. And we got our auditors to really audit those numbers that we would then declare. So on that itself, 2021, we said it's about $50 million. And then I say I'm going to double it for the next few years, back in 2021. So 22, it was 170, 23 was 370, and then 24 last year was about 770. This year it's still going on that trajectory where we will land. Let's see how the year end ends. But that in itself is just an example of how we look at using AI to help us improve our processes, help us to be more responsive to customers, and as well as reducing toil for our employees. And that has been the benefit that we have seen.
So you're on the same kind of run rate, doubling the financial impact?
Hopefully.
Year over year?
We're half year through, so let's see what the second half brings.
Ladies and gentlemen, please join me in thanking Kwee Juan, the head of institutional banking at DBS.
Thank you, Erik. Appreciate it. Good fun.